Hey, well, good afternoon, friends. Hope you're doing well. Thanks for joining us today on our webinar. Today, I'm thrilled to feature an amazing diversified digital asset manager, Hyperion Decimus. Now, Hyperion Decimus is not quite as well known as some of the other ones that we've covered in the past, like Grayscale and Bitwise, but I assure you their performance is off the charts. Timing of this webinar cannot be better. As all of you know, digital assets has really finally arrived, right? With the recent approval of the ETFs, uh, it's just an asset class you cannot ignore or deny the legitimacy of. Good news is it's still very early in the game. And what I mean by early is it's a very small asset class. Just looking at some of the other asset classes, commodities represents roughly 130 trillion, global equities in the neighborhood of 110 trillion, crypto is about 1.5 trillion. So we believe there is long ways to go. Bitcoin adoption and activity are accelerating at an all-time high rate. Over 9 million wallets are holding at least $1,000 worth of Bitcoin. Thus, if you're not on board, I think you need to seriously consider it. Today, we have Chris Sullivan, portfolio manager and co-founder of Hyperion Decimus. By way of background, Chris has been involved with quant algorithmic investing for over 17 years. He started his career at Morgan Stanley and has been an entrepreneur since 2010, serving as a PM for Vol Arbitrage Fund. He then co-founded Hyperion Decimus in 2018. The performance of their flagship Libertas fund is truly impressive. Don't want to give away too much here, but as you will see in this webinar, they have an amazing product. The moderator for our webinar today will be my colleague and our head of digital assets, Sean Farrell. As usual, there will be a Q&A at the end of the presentation. We're anticipating over 400 attendees, so please ask your questions early. And as usual, we will be sending out replay information. As always, on behalf of Tom, Sean, and my colleagues, we're grateful for your support and business. Feel free to email us with any suggestions or thoughts. I will now turn the mic over to my colleague and moderator, Sean. Thank you very much.
Thanks, John. Not going to waste too much more of everyone's time. I think John covered all the major points. I think I just want to add real quick before I throw the mic over to Chris. We work with a lot of funds, a lot of LPs in the space, and people who are looking to dip their toes into crypto for the first time. Common questions that come up or concerns, are often along the lines of, how to navigate the space, how to invest, how to deploy capital, given the current market structure. It can often be very disjointed. That is something that people just take for granted in debt and equity markets. But are very unique and disjointed aspects of market structure that it takes a lot of work to deal with in the crypto market. And then another concern is volatility. And given the short lifespan of crypto to date, it's kind of hard to build up dependable quantitative processes to deal with serious bouts of volatility in both directions. And I think both of those aspects speak to why Hyperion Decimus offers a particularly intriguing solution for deploying capital in crypto. I'm not going to spoil the punchline here for everyone. I'll let Chris speak more in depth as to what they have, what they're building, and how they look and how they deploy capital. With that, Chris, welcome in. Happy you could join us.
Thank you, Sean.
How about we just start out? Maybe you give us a brief intro of yourself. How'd you get into crypto, and then maybe segue into an intro to Hyperion and its mission.
Yeah, sure. I'd like to thank everybody for taking the time out to learn, about crypto, about the assets class, about how thoughtful investors look at it like we do. While it is daunting and complex, I think that's also part of its beauty and certainly part of its asymmetry here. And as John correctly articulated, we're not yet late. We're fortunate to have been self-financed, so we went at this with the idea of being prop, and then through demand got converted into an LP. But yeah, it's been a fun journey with lots of potholes along the way. But I think I'm here to just convey both professional asset manager, processes and disciplines, which maybe are lost on this space or was in 2022, as well as how we think about it and what's responsible. I can speak a bit of myself, but John covered it. Morgan Stanley ran hedge funds since 2010.
He's an excellent executor. He's also modest. Chris, how did you find yourself getting into crypto? What did anything spark it? Can you speak to kind of just your broader thesis on crypto?
So as a historian and economist, like de facto, I've always been an Austrian. So searching out, essentially hard money, for lack of a better phrase, it was always like in queue to try and find. Then by accident, playing poker in Costa Rica, I got exposed to it in 2013. In 2014, my wife actually was mining Ethereum on a Dell laptop. And then in 2015, one of my really good buddies asked me to invest in his Bitcoin ATM company. And then I actually really dove into it. And 2017, we launched the firm, and then 18 as an LP. And I can't believe so much time has gone by, but 24/7 markets just totally different than TradFi.
You said it. Yeah, who amongst us has not found their intro to an emerging asset class while playing poker in Costa Rica?
Once I started looking at it, once you use it, folks, you're going to be sold. So that's step number one. But what got me at first, Sean, is I kind of have a semi-photographic memory. So I started diving into the charts in 15, and they look like commodities 50s through 70s. And the purity of the price discovery of the fractals I was like, oh my God, this is amazing. Let's go at it. And luckily, my partners are a little more senior than I am and super skilled. So we thought it was a risk worth taking as a business.
Love that. I'm gonna pull up some slides. I think we should. This deck was sent out to everyone, all of our clients and subscribers. I'm gonna do my best to kind of align the slides with what Chris is saying. But Chris, I'm wondering if we could just unpack. We can intro Libertas, which is your Hyperion Decimus's flagship multi-strat fund. Maybe we can unpack that strategy and how you guys approach the market. Let's just get confirmation that everyone can see the screen.
Very briefly, Sean, I disagree that volatility people should have a problem with it. It's a feature and an opportunity, not a problem.
Operating in the space, I would agree with you.
Well, and now we went from 98 vol to 40 vol. That's kind of boring. So, we come from an understanding as quants that volatility is actually an asset class in and of itself.
Yeah. So what are some of the ways that, how do you guys, can you maybe intro Libertas for everyone? Kind of speak to the strategy employed and how you guys effectively manage around volatility in this market.
So we had the idea that it would be understandable and palatable to kind of structure it as like 60/40, since everybody's used to that sort of nomenclature. And we knew we needed to have a long book, even though we aren't like fundamental value stock pickers per se. And there's certainly fundamentals in crypto that have been crafted along the way, but we knew we needed to be long the assets. And when we started, there was only 6, as you recall, Sean. So we wanted a basket of some weighting based on market cap and liquidity of those, to capture up and to the right asymmetry, right? And then from all of our collective backgrounds, we wanted to mix and match alpha concepts from the traditional space, like mean reversion, trend following, momentum, market neutral, long short, and combine those in a thoughtful way that also has a really neat alpha rebalancing overlay to it, so that we could, not be suffering, just one direction.
Yeah, I mean that's what stands out to me. There's a very there's not much differentiation to find in the crypto market. I mean, there are, but in terms of finding uncorrelated assets, that's kind of tough in this market, right?
Right. That's why it has
Sometimes
to be uncorrelated alpha from the strategies themselves, not uncorrelated assets.
understood. And so we look at the strategy allocation matrix, we're seeing about 60% is systematic, 30% fundamental, that and 10% you use leverage derivatives. So we have about, is it right to say about 40% is that managerial overlay, and then the rest is set and forget, or obviously you're iterating on your algorithms
we
and
have
whatnot.
machine learning on top of everything, so it's not set and forget. But yeah, and we've had to create and retire different strategies as the market structure, efficiency, and order books and tech stacks have improved. Because when we started, we had all this tech from what we'd previously built. Like Hein Bodek, my partner, he built a lot of the HFT options infrastructure. Kamel built CurrentX, the FX platform. So we had all this tech and we couldn't put it to work. We had to build a separate interface console for market making. That was what we call gray box. It was like a video game pressing buttons. Now, I will say it was the most fun I've ever had as an asset manager, but it was difficult, connecting to, I think we did 122, 123 DMAs all over the planet. And if you're not a technologist or a dev, even doing that kind of API work is super daunting.
What is a DMA?
Direct market asset access. So
I see.
Might be
so it's like an API for investing.
Yeah.
Got it. That's interesting. How so the fundamental long bucket here, is that totally manager discretion, or are you trading on, say, like catalysts, or how do you guys kind of approach that aspect of the portfolio?
It is discretionary, but we start with a universe of the 100 largest and most liquid names, and then siphon those into 5 sectors. Bitcoin essentially being its own animal, but then L1s, L2s, DeFi, and Web3 metaverse. And so that we have sector exposure to all of what we think are long-term sectors in the space, as well as omission of stablecoins and meme tokens or whatever the other silly things that people want to trade. And then we get into the weeds. Sean, that we've written smart contract risk and rating scoring for that. DeFi, we are one of the founding members of DeFi Alliance. So we try and underwrite to the best of our ability and not let personal sentiments overweight or underweight any names. And it is a unanimous vote. So every one of the 6 partners has to be in on adding or subtracting a name.
Got it. That's helpful, and that's interesting that your process requires consensus. Like,
we are OG to the space, to the core, and we're kind of our partnership's more of like friends that got together, and now we're kind of like family. So it was easy to kind of align our interests and processes with the space.
Yeah, I want to talk about this last aspect of the strategy, the derivatives, but I think that's a good place to maybe intro your team. Can you maybe talk about the roster you guys have at Hyperion, and kind of how you see your human capital as a differentiator?
Aside from the horrible pictures from us, yeah, essentially we were kind of put together by mutual friends and did some research projects on ETNs of commodities. And it was EDF Man who put us together to do a project, and that was years and years ago, to kind of try and model out the arbitrage between the ETNs and futures themselves, or spot. And so we are fortunate that Heim's one of our co-founders. He's developed all of the market making HFT tech that we utilize, even though HFT is not the correct nomenclature because there's no colo. We call it MFT, which I think eventually people will adopt as the right acronym. And then we've got some other heavy hitters like Rishi Narang, who, ex-Goldman and UBS, et cetera. He became a partner in a very interesting way, Sean. He was one of our first LPs as kind of a friends and family component. And he just was like, how the hell are you guys doing this? And then joined in that regard. Jeffrey Tai is our DeFi PM, but he also was basically the entire platform architect of OmniX. I mean, myself and Kamel did some as well, but that OMS EMS system sold to Gemini in January of 2022. And then Stan, JD MBA, he's our CRO. He has worked with Heim for about 20 years, and it was a package deal. And Matt, I actually grew up with, and when I started my firm in 2010, he started as a trader and then became COO.
I love that. You mentioned, all sarcasts, particularly in the realm of, those aspects of market structure that you guys are experts in. You mentioned changing the acronym from HFT to what was that?
MFT.
And what's the M there?
Medium, because we stick to orthodox definitions. So true HFT is milliseconds and colo, and there is no colo in crypto, right?
Right. That's just putting your trading desk like nanometers away from the exchange, right?
Right. And if anybody's read Flash Pools or Dark Pools, that's literally about Heim. And then just recently, Rishi, speaking market structure, released his best-selling book called Inside the Black Box. It's the 3rd edition. It is a hefty read, but I highly recommend it for those who want to learn more.
I will get it and run it through Chat GPT and have it come up with a summary for me.
Cliff's Notes would be better than that.
No, I appreciate you taking me through that. I think there's a lot of, you guys have a lot of miles for a crypto investment team, and both in TradFi and crypto, which I think is, you don't see that all the time. Anyway, you don't see that really ever.
It just was the promise of decentralization, plus the I can't stress this enough. Bitcoin is one of the most special assets on the planet, irrespective of its price and whatever fiat. What that network offers humanity is boundless, essentially.
I could not agree more. That's why I'm standing here. All right, so let's circle back, finish chatting through this strategy allocation matrix, because I am curious. 10% of the matrix. Now I'm sure this matrix probably moves, a few percentage points in either direction. But 10% we have allocated to futures and options. I guess broadly, can you speak to how you guys leverage derivatives? And is that, is that for leveraging, finding leverage for upside exposure? Is it mostly for hedging, downside risk? How do you guys view that part of the matrix?
It's a great strategy to highlight, because it's not as easy as TradFi. We actually did trade the very first options on Bitcoin, Ethereum, and 15 names in the space, essentially as a maker with a group out of Chicago back in 2018. And you don't have a real fully liquid electronic options market, right? We are a DMM on CME, and then you can trade electronic on Deribit, but not in a robust enough way for us to have it algorithmically trade. So primarily it is, I would say 90% of the time, it's in some sort of portfolio beta hedge overlay and or cash equivalents. And then options, we basically take up on our long book, we want to monetize some of the vol. We do that in one way by staking stakeable assets. We were the first fund to ever run nodes, which is fascinating in of itself, so that 11 names in the portfolio are yielding something and effectively double compounding, which does increase the Sharpe of being that long, in addition to being in cold storage, so they don't have exchange risk at that moment. But on names like Bitcoin, for example, that we hold in custody, I'd like to essentially sell collars when it's appropriate to do so, and that's part of our beta hedging component of the option strat. Futures we basically combine with it so that we've got both essentially assets go in the same direction.
Got it. Yeah, I think that all makes sense. And it's to your point, I think the derivative space in crypto has come a long way, even from when I started. But certainly is not as liquid or as efficiently priced as equity markets, right? So
I would argue it is efficiently priced, but it's certainly not as liquid.
Yeah. Okay. It's a
You're
fair
willing bid and ask, right? So
yeah, no, that's fair. It's just the distance between that bid and ask is sometimes quite a quite a span,
Oh yeah, it's if you look, no, this is recorded, but you can go into an order book and I can tell you where we are. We're the bid and the ask on different stuff right now. But with that being somewhat of a pain in the neck from an execution standpoint, luckily we have execution specialists on our team. We navigate that pretty thoroughly.
Yeah, I'm glad you brought that up. That's now we're skipping around the deck a little bit. Sorry if we're giving anybody motion sickness. I do want to chat about you mentioned running nodes. Something I think is very special about you guys is your in-house infrastructure. In addition to nodes, you guys also developed your own OMS/EMS. So maybe can you speak to kind of your robust data infrastructure and how you think that sets you guys apart?
I would say the biggest value add of it was learning, because to be very honest, we didn't want to have to build all this stuff. But it wasn't at the time an off the shelf plug and play like a TT or CQG or any interfaces like that are common across Wall Street or Knight, for example. So it was extraordinary in bringing us up the curve fast, Sean, but it was a ton of work and debugging and an unbelievable amount of lines of code and rewriting of code, et cetera, which is why it was a separate software firm to hire other folks to help with it. But essentially it ensures that all of the alpha we can extract from our team and skill set is inputted to every part of the trade cycle, whether it's execution, where 95% of our order flow is maker, which doesn't pay as high a fee as a taker, and making sure there's a combination of smart order routing to get best price and arbitrage across all exchanges, but also have captive flow posted to exchanges to ensure that the full equity risk that we want on per position gets in. So it just ensures that we are able to extract all of that alpha from the skill set and put it to work in execution.
Broadly speaking, it just seems like it makes you guys more robust, more anti-fragile, right? Because you see, you have vendors, counterparties, what have you, entering and exiting and trying to build a position in the space. But vertically integrating, building your own infrastructure, I think it increases the survivability.
Well, it's certainly
for you guys, right?
In 2022, like we do our best to, underwrite everything we possibly can of all the counterparties. But one of the easiest things, which is about second nature or instinct to us, is an order book's a living organism, essentially. And there are certain attributes and features and issues with it that give you color to either go one direction or the other. And we utilize this infrastructure where an order book on a counterparty that happens to be in Southeast Asia, we could tell it was because of their exposure to 3 arrows. There was a narrowing, so we removed trading capital from there. It's also, we were underwriting FTX, not to pick on them, but with blockchain, it has to settle on chain at some point, right? And then when there's a discrepancy in an order book and not that happening, maybe we shouldn't participate there. So it has saved us a lot of, potentially disastrous headaches in that regard.
Yeah. That's since you brought up counterparty risk, let's unpack that a bit. We have this slide right here, discussing counterparty risk management. Obviously, it has been an issue for funds in the space since inception, but particularly in 2022. So I'm curious to hear more from you on how you guys approach counterparty risk, and whether you still see that as one of the bigger challenges in the space.
Yeah, it certainly is and shouldn't be, essentially, Sean. So in a perfect world, I'd love to have 1/3 of our exposure on exchanges or SEX exchanges, 1/3 trading decentralized on DeFi platforms, and 1/3 with quote unquote primes. That way you're getting the best and worst of each collectively and have lots of optionality. We have some version of that now, but only 3.5% trades DeFi currently, mostly because of liquidity, and the UI UX is daunting, to say the least, even for practitioners like us. But our approach was essentially underwriting both financials, team, and tech. We come from kind of the SOC 2 compliant background where we can underwrite tech, and that usually uncovers most of it. And then I happen to be on the board of a bank here in Florida, so I can, look up banking access for all the counterparties, even if they won't disclose it, So we just kind of do as much as we can to underwrite, to be aware of known unknowns and known knowns.
Yeah, since you mentioned it, I think everybody is aware of Choke Point 2.0 and the crackdown from our prudential regulators and trying to force, both individuals and funds kind of out of crypto due to lack of banking access. Have you seen any, difficulties banking, not due to Hyperion Decimus and their standing and your liquidity, just generally because you have a crypto attached to your name?
Absolutely.
Yeah.
Yeah. I mean, what we've experienced directly is, now we're a Delaware Cayman traditional hedge fund. We don't have crypto in the name. So how would anybody know what we trade, nor is it any of their business? But we have definitely seen rejections of allocations from major banks. So it's still happening now. And then I've had many of my friends at various counterparties, whether they are a custodian or a prime broker, get cut off and have no access to their capital, be forced margin called out of the trading platform that they're on. So Choke Point 2.0 is maybe a kinder name to what is actually happening.
Yeah. No, it's certainly, I think the industry is finding solutions, right? But certainly has not gone away.
It really, unfortunately, stems from UCC Article 8.9 and the safe harbor provisions from 95 or 94 and 2005. Like, we're all unsecured creditors in our banks, and they can tell us what to do with our own money, which is really frustrating. Forget all the fees. And having, institutions and family offices experience that real time. The anger is kind of fun to experience because then it orange pills them quickly, but it's very frustrating as a business operator to have to deal with that.
Yeah. Have you found, obviously you're diversifying custody, right? Have you found yourself allocating more funds to self custody? Is that something you guys, or strategy you guys either employ or are thinking about employing?
I'm glad you asked that, considering my entire team is full of contrarian bear nihilists. I kid you not. We take pride in our ability to hedge, right? And depending on what your definition of that word is, ours is total loss, right? In any terms. So we absolutely have that as a redundant fallback. Currently, the percentage with which we would do it ongoing is variable, but figure about 10% is responsible. We don't want anyone that underwrites us and does formal due diligence to think that we can made off with any money. And in self-custody, that literally means we can. And we can't not have it either, Sean, because we're large LPs in our own fund. We're going to protect ourselves to the best of our ability. And obviously we're not going to steal anybody's money.
Right. And look, that aligns with kind of how when I talk to clients and they ask about custody solutions. I am a fan of diversifying custody, right? Because you need differing levels of access, liquidity, and it's just all about managing risk, which sounds like you guys are prudently doing.
Yeah, the very first risk we were terrified of, Sean, was hacking risk. And so we engaged a publicly traded cybersecurity firm to actually build us some hardware, which is to my stage right in one of our server rooms. So we have front end and back end cybersecurity.
Yeah, that's a pressing issue, I think, for everyone in the space, and an issue that's not going away. So that certainly should give LPs some comfort. We have this slide, and again, I know we're jumping around. Apologies again for the motion sickness if we're causing it. We have this slide called Survivorship Alpha, and it's tough to actually quantify what that means. Obviously you've been around, they launched in 2018. I've seen the full cycle. We're there for the crazy drawdowns in 2022. But I think, Survivorship Alpha comes from, weathering those storms, but also building relationships in the industry that allow you to have more favorable relationships with vendors, which comes through in a lot of your deals, and to just generally have strong relationships with everyone in the industry and build a reputation, for being a good actor that has just been through it all. So I was wondering maybe you could speak to what you view as Hyperion's Survivorship Alpha.
Yeah, I mean, this slide articulates the monetary side of it. But and again, it did help to come from TradFi, where we're used to certain cost structures. Granted, these assets are essentially digital hard assets, so it's a much different settlement transfer process that requires power and hardware and software. But we're going to cram down everyone to the best of our ability for the betterment of our capital, right? We're not here to be nice. And so that being said, we have added enough what I would call consultative alpha regarding tech stack, matching engines, wallets, etc., where if somebody wants to keep our business and they're worthy of it, they're going to have to compete, and that has won more than it's lost for us and our clients.
That's great. I think it's a good summary of.
And I didn't intend it being a speaker at all the crypto conferences, but I do have fun doing it. I'm a PM and a quant, not a actor or a salesperson. So.
Yeah, no, and I can attest to that. Chris is on a lot of podcasts, and I've seen him speak often, and he's wearing a suit today. And I think, but when you see him without a filter, I think it is quite refreshing, and frankly, someone who you should feel comfortable, navigating the space with your capital. So on that note, I think where are we at on time? All right, we actually have 40 minutes left, so I do want to get to the public Q&A real quick. I think I have a couple questions remaining. I guess, first, we haven't really discussed kind of just the market setup. Now, of course, you guys are very quant informed. You've discussed your process, but I was wondering if maybe if you could step back and share any thoughts you have on, from a high level, the current market setup, and how maybe it compares to prior cycles, or you could take it any direction you want, but I'm just concerned about how, I'm just curious about how you see the current market.
Well, it would be doing my existing clients a disservice if I give up a bunch of alpha for free, but I will comment broadly that we have a unique set of conditions specifically on Bitcoin here that are pretty exciting, Sean. But again, folks, I dream in Satoshis, so my backdrop is I don't care what it is in fiat, and basically if we can most attractively convert fiat into this asset class, then we're winning. But there's an interesting combination that could create what was once called a crack up boom or a big old fashioned short squeeze, where you have the ETP, ETF products globally. There's Hong Kong's coming online soon. Then you have pretty incredible short interest everywhere as well. Miners have sold, bankruptcy resolutions have sold. So I'm honestly shocked it's handled all of that selling the last 3 to 4 weeks. All we got, I think, peak to trough was 18 points. But I would argue that we should be mentally prepared for like pretty crazy upside surprises, because the mechanics are set up to where there's a probability and possibility of a pretty serious move. And that I always argue all corrections should be opportunities to accumulate. It doesn't matter what asset that is. That's true for everything. And we've designed this whole portfolio to kind of be risk managed long so that we're not ever missing an opportunity to do that. I still think there'll be some regulatory overhang FUD, but as we get closer to election season, I think the attention will be diverted away towards that. And then I think that all the remaining actors in this space, Sean, are good actors with great tech infrastructure, with undervalued corporations, and are good and fun to do business with. So I think the vol cycles of 13, 15, 18, and then the human fraud cycle of 2022 that was overlaid to the digital asset space, I think really has sussed out and cleaned up the space. It's I would argue quite a bit more mature and investment grade now. And you wouldn't have had that without any type of the FUD that's gone on, whether it be regulatory or bad actors.
Yeah, no, I agree. It's kind of a cliche, but the term shaking out the weak hands, that's what that is, right? And it really, the frauds of 2022 really pulled the tide out and showed who was wearing underwear, or whatever that Warren Buffett saying is. And the industry is better, more robust for it. So, and like you, I am rather impressed. We saw some potential volatility, some macro-driven headwinds headed into Q1, and frankly, I'm super impressed with how well Bitcoin and the broader crypto ecosystems held up.
But that's only one prism to look at it, Sean. Like my concerns mainly the network hash rate, et cetera. But yeah, it held up price wise.
Yeah. You mentioned regulatory FUD. Is there something specific you have on your radar? I don't want to put you on the spot.
Unknown unknowns, like
got it.
They can just make stuff up and scare people. Like
yeah.
I mean, they have a pretty good track record of doing that. So I just wanted to be responsible and reserve a category of potential risk that would show up, because I just don't see it being like completely resolved, right? Like for example, the Coinbase cases are not resolved. I don't think Ripple case is out of court completely yet. So I think there's going to be news and tabloid style pieces that could instigate a price correction.
We call that, Chris, noise.
I call it an opportunity to convert fiat into assets, which
there
is the
asset
management game.
Same thing.
It doesn't matter what the asset class is. You always buy when it gets cheap.
Indeed. So Libertas fund terms, can you speak to maybe the fund terms and specifically the costs? I'm sure a lot of people are curious about the cost profile.
Yeah, so we absorb most of the ancillary costs, like all our tech stack. We're not putting that on the fund, and honestly, we want the write-offs for our own GP. So pretty simple. What I'd like to articulate is that hurdle rate. We are all real estate investors, whether it's hospitality or multifamily or mixed use. So that is a 10 ref annual. So it's 2 and 25, but the 25 doesn't kick in until every client's made 10 and they're above high water, et cetera, et cetera. So it's a very symbiotic fee structure.
Got it. We love to hear the words symbiotic and fee structure put together.
Yeah,
In the same
I mean,
sense.
honestly, it should be 550 because you have 3.2 times the literal hours of trading.
Right.
So, you know,
I do. You told me that logic before, Chris, and I think I'm coming around to it. I kind of like it.
but it reflects kind of the mantra of the team as well as be investor centric. And again, our money is next to our clients' money, not in a side pocket, paying the same fees.
Indeed. Great. So we have about 15 minutes left. Let's turn to the public Q&A. There's a few good ones in here. Let me just go through and grab the first one. Again, if you want to ask a question to Chris, feel free to throw your question in the chat, and I'll try to get to it. This is an interesting one. Do you have any thoughts? Because correct me if I'm wrong, but you guys do LP on in DeFi? Some, okay. Do you have any thoughts on the SEC's newly proposed rule regarding dealers, which I think could have an impact on AMMs and DeFi because LPs would implicitly be viewed as dealers in that scenario?
That's recent, and I did speak to our counsel this morning. So I wouldn't want to misspeak or misrepresent because we need to dive through it. I don't believe the way we're doing it because it's not agency style LPing. We're actually it's parameter LPing, and you know we can set that. But I have our counsel's reviewing that, and it's less than 1% of AUM doing that.
Okay, that's helpful. And yeah, to your point, it's a very new
regulation.
First off,
they don't have jurisdiction, by the way. So
right,
everything in DeFi is going to operate as is, and the capital that is in DeFi wants to be there, is never leaving there, no matter what any rules are.
Yeah, I think that's the proper take. In a similar vein, do you have any concerns about? I know you mentioned the FUD aspect, but do you have any broader concerns about the regulatory environment here? My view is that we're kind of past regulatory FUD, and the results from the judicial system and from the courts over the past 12 months have really they've kind of spoken the truth. So I'm wondering if you have any differing views there in terms of the regulatory environment here in the US. Do you see it improving or not?
Well, in both Singapore and then the MiCA bill in Europe, like the taxonomy references, it's very thorough, very articulate. So I think if the United States wants to try and compete, they're going to have to do something thoughtful that creates great precedent, that engages innovation, business creation, et cetera. So since we already have two really transparent bills that are solid, I would like to think that our fellow Americans would catch up to speed and make sure our country doesn't fall behind on blockchain innovation. So that's my hope. In addition to the kind of surrender by Gensler and letting the ETFs come out. But that's my opinion. Subjective opinions don't matter that much, but that's how I view it as an investor.
Yeah. And I'm kind of there with you. You mentioned ETF. Do you have a personal or in-house view on the ETH ETF?
No.
If you had to guess, do you think that it goes through in May, I guess?
You're asking a quant to subjectively predict regulatory. That has a 5 wide standard deviation, 5 sigma bandwidth there.
Okay, is volatility mispriced heading into that event?
I do think it's too low in general, and realized and implied are too coalesced. So I think vol is cheap here. Yes. But remember, the biggest vol events on realized are upside vol. So you can have it both directions.
That is an important thing. I think that's an important takeaway for everybody on this webinar. Okay.
Because implied is just the options market. Realized is what's opportunistic.
Right. There is a question here about overlaying a macro lens on your strategy. Is macro something you guys look at a lot, or is it mostly quant plus fundamental?
It would be negligent of any asset manager to not look at macro. Everything's macro. Life's macro, crypto's macro, et cetera. So Specifically speaking about macro inputs, I'm glad you asked, Sean. We have a 62 input macro predictive model that does overlay the portfolio. Now, it took, when did we put that to work? It took May 1st, 2022 is when it went to the whole kit and caboodle, because we needed enough data points to be able to have a high confidence interval on it. And all that will end up doing is being a backdrop for overweight, underweight kind of backdrop, because we are, even if all the algos go short, we will still be slightly net long, and that is our intention. But it would basically, be able to fade both directions and to be opportunistic.
Interesting. That's very interesting. So is the macro model broadly, I guess, what kind of inputs, you say macro, like what is it, just liquidity trends? What are you guys factoring in there or trying to measure?
With 62 inputs, I mean, it's everything from FX swaps, flows, central bank assets, purchases, et cetera, et cetera, et cetera. Rate of change and second derivatives of all of the above too.
Got it. That's fascinating.
Yeah, it has a 0.47 coefficient, so it's at least accurate for now.
I mean, that's impressive. You see, can't tell you how many people on Twitter post charts with a 0.2 coefficient and brag a lot about it. So,
well, and it doesn't mean it's going forward. Like the humility that our age group of people have, and I'm 42, which is a shame. I wish I was 10 years younger. But is that you have to follow what's orthodox in your practice, right? And man, there's a lot of folks that I think are committing malpractice because quantitative math is black and white, and all of it is look back, not look forward. So you have to be humble to be able to pivot. And I think our team's unique set of alpha is that humility to quickly recognize when alpha's decaying, analyze, back it up with data, move slowly, but then replace or add or optimize. And because crypto, many of the names, as you know, Sean, have only been out a couple of years, they really don't have enough tick data to run very sophisticated traditional quant programs.
yeah, I think that's a good point, right?
We want robust and repeatable outcomes. We don't care if it takes 62 inputs or 4.
Right. You just want to find the variables that best inform forward-looking decisions at the end of the day. Mm-hmm. That's great. So, okay, I think we can do one more question. We have so for the excuse me, you mentioned operating in DeFi and LPing. Do you guys actually, this is a better question. Is there anything in the crypto space any themes that you are particularly interested in? Any emerging ones, new ones?
I mean, I'm interested in all of it. Personally and subjectively, I really like some of the shared storage tokens, and then what L2s are accomplishing on top of L1s is absolutely fascinating. So I would say those two categories excite me the most for not only what it can offer the L1s, but the disruption that already exists in the tech infrastructure right now on these tokens can compete with all of the big Web2 companies. And in fact, it's better and cheaper, obviously, but people just need to learn about and experience it for themselves.
Do you have any view on Bitcoin L2s? We're in-house where we have a pretty constructive stance, but I was just curious if you had any
I mean, I
opinions.
don't want to get too subjective, but yeah, as a quote unquote maxi who is going to speak on the main stage this year, I've seen both arguments against and for. I don't see how, if we're going to be okay with the Lightning Network, which is effectively L2, why wouldn't we be okay with anything else? So to me, it's a free market, it's open source, anybody can develop whatever they want on it. Now, Bitcoin's chain's a lot more to cover because it's the most robust chain on earth, but kudos to those who are going through the time and CapEx to develop L2 on Bitcoin's chain.
Yeah, I was I had a meeting with someone over the weekend, and I think they had a really poignant quote. If you can afford to pay for block space, you deserve that block space.
Yeah, I mean, I agree.
Good stuff. All right. So this last question to kind of bring us home. How do our members and clients invest in the Libertas Fund? Who's the best person to contact for more information?
So for Fundstrat clients and friends, they can email me directly, chris@hyperiondecimus.com. And yeah, our ops team and onboarding and admin and audit obviously do all of that stuff, but I'm happy to schedule a call with anybody to discuss this in great detail.
Great. So just to reiterate, that's chris@hyperiondecimus.com. And if you don't write it down, feel free to just reach out to us and we'll liaise there and get you in touch with Chris. But I think that puts a bow on this webinar, Chris. I really enjoyed having you on. And it looks like John's back to send us home, but I just want to express my gratitude and excited for what you guys are putting together.
Thank you.
Yeah, thanks, Sean, and thanks, Chris. This was excellent. We will be referring all inquiries and questions to you. So again, thanks for doing this. And if you have any further questions, we'll reach out. And for all of our clients who tuned in, thank you. If you have any other further questions, you could reach, your sales rep, me, or Sean, and we'll get the answers to you. So till next webinar, take care of yourselves and see you soon. Bye.
Thank you.